Morning, Steve Free in Chicago with the morning grain comments. Well, happy Wednesday. Yesterday we saw a sell-off in a lot of the markets after some tweets from the President of the United States concerning Iran. And we're kind of follow through a little bit in the grains overnight. I think that when you look at weather, it's the number one thing that we're trading right now. And it looks like over the next couple of weeks, U.S. Midwest could see warmer and drier weather than what we've seen. There should be frequent light showers across the Midwest, so it won't be completely dry. But I think that's offering some resistance to the marketplace. We've also seen a better Indian monsoon. We've seen some rain in southwest Russia where they need it. We've seen some Canadian rains. And we've also seen some needed rains in the northern China plains. So all these things as far as weather is concerned is a little negative, and I think it's offering resistance. We're also probably looking for the funds to even up their positions, both in equities and in commodities. We've got the G20 meeting on Saturday. The two presidents are supposed to meet. The Secretary of Treasury said this morning that right now 90% of the deal is maybe agreed upon. Last 10% may be a sticking point that they may not agree, but the market is concerned that without a deal, the President of the United States will slap additional tariffs on the remaining $325 billion of China. There is kind of evidence that globally this trade war is starting to slow the economy, and there were some economists that said that if there's no deal, you could see maybe the world slip closer to a recession and a slower growth in the economy. Here in the United States, our economy, I think, is still good. A lot of people are working, wages are going up, people are buying things, so we don't feel that it's affected the U.S. yet, but it could down the road. As far as any other news, there was some wire stories report that people are trying to define how much U.S. corn acres have been lost due to the wet spring, if yields are going to be down, if soybean acres are going to be down, if soybean yields are going to be down. It could take a while for the market to digest just how much crops are smaller, and if we're trading close to value based on that, or if we need to trade higher. Right now, we're seeing some technical support in November beans around the 917 area. Key support in D's corn is 450, and the wheat support's all the way back into the 530 and 537 area. We estimate the funds are long and now about 20,000 wheat, 120 corn, short about 60 beans, and short about 40 soybean oil. On Friday, the USDA will come out with their report. A lot of people are trying to warn the market that this might be a conservative estimate by the USDA as far as acres are concerned. We also note that soybean stocks and wheat stocks will be record high, and corn stocks will be similar to last year, with farmers sitting on a large amount of corn to sell. And most farmers are bullish, and they do not want to sell that grain in storage until they see this year's crop pollinate. A lot of people think that pollination this year will occur anywhere from 15 to 30 days later than normal. And so if we get into a warm and dry pattern, that could also affect corn yields. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.